Hello, chart watchers, and welcome to this Thursday, August 2nd, Market Watchers Live Show with your hosts, Tom Boley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, another big report out last night with Tesla. Tesla did come through, beat on their top line, struggled on the bottom line, but Elon Musk provided some details of profitability in the second half of the year. Looking at the major indices, you can see the Dow Jones Industrial Average well off their earlier lows, down 96 points. The S&P 500 also reversing near this 2,800 level that's been solid support the past few weeks. Currently at 2814, up 1.5 points. The NASDAQ rallying strongly behind Tesla, up 40 points today to 7747. The Russell 2000 also reversing off of earlier lows, rising 3 points today. 10-year Treasury yield still struggling at that 3% level, down a couple basis points to 2.99%. Volatility earlier was at about a 4 or 5 week high, but it has reversed back down. It's lower by 0.01 right now at 1314. Consumer staples regaining some strength, showing some leadership today, along with technology doing very well after testing some recent lows. Materials once again weak, and not too far from the lows we saw back at the end of June. Apple continues moving higher, and it is now officially a $1 trillion company. Apple following through and confirming yesterday's breakout after reporting solid quarterly results. Watching McDonald's on the Dow actually breaking down below some recent lows. And then, of course, I mentioned Tesla. Tesla up $30 today, 331. Very strong move to the upside, very heavy volume, breaking the downtrend. Looking much better technically. Okay, just a couple days left this week, Erin, and I know we have, when you look at the earnings slate, there were, I think, over 400 companies reporting today, and between yesterday and today, it's close to 750 companies. By far the biggest 2 days of the quarter, and earnings are all over the place.
Absolutely. Everybody kept talking about how earnings in general are just going to pretty much be strong across the board for everybody. And we're finding there are a few misses out there.
There are a few misses, and even hits don't necessarily equate to strength in the stock market right now. A lot of it built in, apparently. But we also have Bruce Fraser with us today. Bruce, how are you doing this morning?
I'm great. Thank you so much. Great to be here.
It is always a pleasure to have you, and you're going to be in talking a little Wyckoff in just a bit. So just hang around with us if you don't mind, and we're going to go ahead and get this party started.
Yes, right away. All right, our upcoming schedules. We have the sentiment update coming up tomorrow. We'll be doing an earnings spotlight when we come back on Monday. And ChartCon is going to be coming up. Obviously, we keep talking about that and looking forward to seeing everybody there. And if you haven't signed up, you really got to do it. We have a few announcements for Stock Charts TV. We don't have Market Watchers live Wednesday through Friday, and we won't have it the following week either. We also, despite having ChartCon right there in the middle, we do have all of these special segments that all of our speakers have been recording, so you will have some new content while we're gone on that cruise. So you'll still want to take a look and watch. Bruce Fraser, as we just introduced, is here today. And 10 and 10 to 1, our first symbol is going to be Illumina, ILMN. And finally, we're going to finish up with some chart breakouts. And we'll be back with technical headlines and news after this.
Welcome back, everybody. You've got the 10-year Treasury yield here on your chart. You can see this 3% level has been difficult to negotiate. We did have a reaction high in the second week of June at this 3% level. We've gotten back up there, and this morning we had a couple of economic reports out. Initial jobless claims, 218,000. That's exactly what the market was looking for. And then at 10 a.m., we had June factory orders come in a little less than expected, rising 0.7%. The market was looking for 0.9%. So perhaps that was a little bit of the reason why we saw money rotating into defensive areas, into the Treasury market and so forth earlier today. And of course, also there was a lot of headline news about the trade war and the potential increase in tariffs that the U.S. may charge on Chinese imports. A number of things were affecting global markets overnight. And as a result, we did see the overall market get off to a rough start earlier today. If I pull up the Dow Jones Industrial, you see earlier we did test the 20-day moving average. This is actually a positive. I think as we've been moving higher, we've seen the Dow lead in July. The PPO is pointing higher, suggesting that the bullish momentum is accelerating to the upside on the Dow. And when that is the case, when you pull back, you like to see the rising 20-day moving average hold. We went right down to that level and then bounced earlier today. So that is certainly a positive. Let's pull up Apple. Apple, as I mentioned at the open, is now officially a $1 trillion company. The stock is up another 2.5% today on top of a huge increase yesterday. The stock was trading about 190 when they came out with their earnings the night before last, and they came through. They beat on the top line, beat on the bottom line. Everybody wants an iPhone, no matter the price. And Apple, you can see, responded very nicely to the upside. Very heavy volume, too, which I think is always important to confirm a breakout. And we're seeing follow through today. So Apple, not a great stock to chase. I think maybe we'll get a pullback at some point, maybe back closer to that 200 level. But at least for now, Apple is strengthening and is over that $1 trillion market cap level. Tesla did come out with its earnings yesterday. Here you can see the big gap up. It's now up $33 today. Seems like it wants to make a run after taking out the double top from July. Looks like maybe we're going to make a run for the June high up around 370. To the downside, I would watch the now rising 20-day moving average. Tesla did beat on their top line. They missed on the bottom line, but didn't seem like investors really cared too much. Tesla on the bottom line reported $3.06 loss versus the anticipation of a $2.82 loss. But the revenues were $4 billion. The market only expecting $3.93 billion. So seems like traders more excited about the possibilities with the revenues. And then, of course, Elon Musk did also announce that he is expecting profitability in Q3 and Q4, and cash equivalents, I believe, are at $2.2 billion, if I recall correctly. And they are expected to grow in each of the next 2 quarters. So that, I think, really got traders excited. And as a result, you can see the gap up today, the very heavy volume coming in. I mean, we've still got another 35 minutes to the halfway point of the day. And already Tesla has traded close to 12 million shares. This could be its highest volume day of 2018. We'll have to see how we close later and see if the interest continues in the second half of the trading day. Also, the NDX. I mean, we talked about Apple. We talked about Tesla. Let's take a look at the NDX and what's going on here. From a daily perspective, looking at the daily chart, we do need to try and clear above the 20-day moving average. And it seems like we're doing that, at least for now. The 20-day moving average, 72.96. We are currently back at 73.37, looking pretty strong. And I thought 7,300 was going to be a pretty key area for the NDX. You can see we got up the last couple of days, tried to test that 20-day moving average and price resistance, failed, came back down. Well, today we're above it. If we can close above it, I think we got another shot at the 7,500 level. If we fail and we leave this tail up above the 20-day, I believe we'll head lower. Don't know how much lower, but maybe back down in the 7,100s. If that support level doesn't hold, then I think we could be looking at that late June low. But really a lot of speculation at this point. Let's see how the NDX closes later today. If I pull up the hourly chart on the NDX, as you go down, what you expect is failure at the 20-day moving average. And notice yesterday, we went just above that 20-hour moving average, got to the 7,300 level, and then started to roll back over. Gap down today, but we have come storming back and currently above both 7,300, above that 20-hour EMA, above the 20-day EMA. So things are looking up currently for the NASDAQ 100, and that is good news for the bulls at this point. The XLK, of course, with Apple so strong, the XLK trying to clear its 20-day moving average. It struggled yesterday, couldn't get through. It actually had traded below the 20-day moving average for the last 4 days, and now getting back up above that level. That's sitting at 71.92 right now, and we're currently at 72.14. So we got a little bit of room to the downside. We'll see whether or not the XLK can clear it into the close. A couple of areas to watch here. Certainly the computer hardware index, the DJUSCR, big breakout along with Apple, of course. That is leading technology. But the other areas that had been leading technology and are struggling, or at least have shown signs of some struggling, software. Can software get back up through that 20-day moving average? So far, it is looking like it can, but can it hold into the close? Also, semiconductors. Semiconductors earlier today, you can see actually had moved to about a 4-week low, but they have recovered very strongly. The group is now up about 0.75% and challenging the 20-day moving average. You can see the PPO right near the center line. I think right now semiconductors are simply looking for direction. We've been consolidating for the last several weeks, and I suspect that either a breakdown below 3,400 or a breakout above 3,550 will signal our next intermediate term move in the semiconductors. Internet stocks under a lot of pressure recently. We had, of course, Facebook's debacle with their earnings report. We had some additional confirmation to the downside with Twitter's earnings report, and not being able to generate the type of numbers that traders were looking for. So the overall group went down. Notice we are holding at that late June, early July low. Also, back in the second week of June, we put in a low at around 1720, 1725, and today's low at 1719, and now we're trying to reverse. This one, there's been a lot more technical damage, though. I think you can see we continue to trade for the 6th consecutive day below the 20-day moving average. A lot of volume. So far, short-term support holding at that 1700 level, or just above that, maybe let's call it 1720. If we close back below 1720, I think the selling could escalate here in the internet stocks. Otherwise, look for pushback to the upside. As I mentioned earlier, over 1,000 companies reporting this week, with most of those companies reporting either yesterday or today. According to Zacks, 407 companies report today. Let me give you a couple of them that look pretty good after their earnings reports. CF, this is CF Industries. Big breakout here. CF beat on the top line, also beat on the bottom line, crushed the bottom line number, actually 63 cents versus 42 cents, seeing a very strong reaction there. ESIO, this is Electro Scientific Industries. They also came through with a very nice report, beating top line, bottom line 96 versus 85 cents, and they guided their Q3 revenues and EPS higher. Huge move higher, very heavy volume, now challenging that March high. And I think on a weekly chart, we've broken out of a down, it looks maybe a little bit like a bullish wedge. Beautiful uptrend. Connect these highs, connect the lows. They're squeezing in a piece of pie. Look at the volume picking up as we break out to the upside. I think ESIO has a shot to maybe reach that 27, 28 level that we saw in the latter part of 2017 and early 2018. Let's see, another one that looks pretty good here. We talked about Tesla. How about Fortinet, FTNT? Big breakout here. You can see the volume already very strong on FTNT. And what we had here was a beat on the top line, bottom line 41 cents versus 35, so beat there. And like ESIO, guided Q3 revenues and EPS higher. Nice breakout, very strong follow through here on FTNT. What doesn't look so good today? Cognizant Technology, CTSH. That would certainly be one. You can see after a huge gap down, it's trying to rally back, but CTSH did come up short in terms of revenues. They beat on the bottom line, 119 versus $110, but they did guide their Q3 revenue lower. Market not too excited about that. And then the last one I'll mention, also pretty bad reaction to a report. Eris International, huge move to the downside, very heavy volume. Eris not only missed on their top line, but also missed on the bottom line, I believe. Looking for the numbers, I thought I had them here. Yes, here they are. 1.73 billion in revenue, market looking 1.78. And bottom line, 72 cents versus 75. And then Eris completed the trifecta and guided their Q3 and fiscal year 18 numbers lower. And you can see this is a pretty ugly move to the downside, down more than 10% today and falling below that February low. We do have a couple of downgrades, so I'm going to let Erin take over and go through those with you.
Yes. After that ugly chart you just showed, I've got some more to show you. All right. Bungie Limited. JP Morgan actually moved this one from overweight into neutral. And let's take a peek at that chart here. To get it right up there. There it is. All right. So it's been in a declining trend anyway. When you look at that declining tops trend line, it is hitting some interesting support right now, but let's face it, the really big support line right here is down on that November low. You can see the PMO looked like we were going to get a switch in that momentum to the upside back after yesterday's move, and now a follow-through move to the downside. The PMO is just falling fairly quickly. I mean, you might want to watch for this one if you want to bottom fish, but when I have a setup of those kinds of EMAs as negative as you can get, I pass on that. Foot Locker, this one is listing right now as underweight. We can see that it's now sitting right on that gap support. I've marked that here. And I did just get an intermediate term trend model neutral on this before this downgrade. And you could see that the PMO and momentum were already moving lower. And of course, the scooter fell out of the sky at the end of July on that big decline. So while we are sitting on this interesting gap support, we're closing that gap. I suspect we're going to go lower. And it makes sense when you see that downgrade. Hanesbrands, its listing is equal weight from overweight by Barclays. And we can see that we've dropped well below this area of support. I had gone ahead and marked that in at this low in November, the February low, and a couple of tops here in May. Dropped below that yesterday. So we were already seeing a free fall here in Hanesbrands. And we're getting a little bit of an upside move right now, a little over 1%. But it sure doesn't look like this is the best area to look for some support. I suspect we're going to move even lower here on Hanesbrands, especially when you look at that ugly PMO. IQ, right now it's a newer stock, so I moved this into a 6-month time frame. Goldman Sachs moved this one from a buy to a neutral. And you can see this declining triangle here, this descending triangle formation. Those are bearish patterns. So we're sitting on the support line here at the early July low. But the unfortunate thing is that we have this bearish formation. I wouldn't expect to see this one break out from that declining tops trend line. And finally, Royal Dutch Shell. Morgan Stanley moved this one from overweight to equal weight. It's now dropped below some support we saw back here in June and is heading to somewhat strong support, I would say, right around 64 at these tops we saw in the spring. We're getting ready to touch on that 200-day moving average. I don't like the PMO, so I don't think I would put it on a watch list, but we could be seeing some support here between that 200-day EMA and that $64 level. That's all of the downgrades that I was going to talk about. I think it's time to bring in our very good friend, Bruce Fraser. Are you out there and ready?
Oh. I'm here.
Oh, I'm sure you are.
So
quietly contemplating.
I was just studying those charts. It's just, it's easy to make my mind wander into charting. So anyway, that was really good.
Hey, Bruce, before you get started, does it bother you at all when you see the headlines each morning? I mean, do you even pay any attention to it? Like when you see the trade wars, renewed again this morning and the Dow down, 180 points or whatever it was. Does that bother you at all, or do you just kind of stick to your guns with what you do with Wyckoff?
Yeah, such a good question, because I try to understand. It's like I don't pretend to be like really good on the news, and how the news should relate to a stock or to the market. I've been doing this a long time, and I don't think there's too many people that can do this really well. I know a few, but what I do.
You mean besides Erin and me?
Yeah, you guys are the best. And but what I do try to do is to see how a stock or the market is trading in comparison to news. And then I put it in the context of Wyckoff structures. And so if I see a stock, say springing a low like Royal Dutch, for instance, and I see it springing a low, and I'm now would pay close attention to see whether or not it can resist declining further on that analyst reduction. And so if it can then turn back up into the structure after having had that bit of bad news, I would say that's quite bullish. So those are the kinds of things I try to do. And so,
fair enough.
Yeah. So news is tricky. News is really tricky. And I think it's better to see. Well, in Wyckoff, this is such a good question, because in Wyckoff, we always want to act in conjunction with, in sympathy with the composite operator, which is this big fictional character which buys and sells massive quantities of stock when they're accumulating or distributing their positions. And so they will use news in a manner that will support their campaigns. And so what happens often is that, say, in distribution, you'll have just this glow of good news at the end of a big, long, uptrending move. And the CO will at that time say, okay, I'm going to start to reduce my position. And they have so much stock that it takes them weeks to months to be able to reduce the size of their positions. And they have to do that into the glow of good news, into the glow of general good feelings for the market. And so we're always sort of operating on the tape in sympathy with the large interests, and we have to consider the news to be a tool that they use to be able to do their work. So that's sort of how we view it. And so anyway, I actually have an example of that today. Hopefully we can get to that.
Okay, perfect. Well, take it away. You got the floor.
Cool. Okay. So, yeah, you've heard of a wedge in technical analysis?
Yes, also in golf.
In golf, well, I think Hanesbrands just got a wedgie.
Right?
Right? So that's a technical term, right?
Yeah.
So I think they just had a wedgie. So anyway, okay. I'm going to take over, and you can tell I'm really good at this stuff. Okay. Can everybody see my screen now?
Yes, we got you.
And then I'll go to...
There you go. Perfect.
All right. Well, the first thing I want to do is I want to talk about ChartCon, because as we all know, we had to turn in our presentations, and I always wait to the bitter end. I'm always like tweaking stuff right to the end, but I'm so darn excited about ChartCon this year. And I really want to hear everybody else, but also I'm excited about my talk, and look forward to hearing me, not because I'm really good at this, but because I love the content. And so these are schematics, and we will have a little bit of a review about schematics in ChartCon, but then we're going to go deeply into when to take action in the Wyckoff method based on these setups, on these structures. When to take action, how to set stops so that we're taking a minimum of risk. And also we have less likelihood of the stops being hit, because we've entered at the best possible tactical place. And so if we're wrong, as determined by the stops being hit, we really don't want to be there anymore. So we want the stops to tell us that we're wrong, and not just have some arbitrary volatility take us out of a good trade. And so there's a structure and a thinking and a methodology behind everything that happens in Wyckoff. And so these two schematics are examples of things we've talked about in the past, but in this we will go through from the beginning of accumulation to the end. We're also going to do this for distribution, and but we're going to spend more time on accumulation, and we're going to go through the logic of each one of these phases and why they occur when they do, what they look like in their chart structures, how the price bars and the volume interact, and how they change through the course of the maturity of an accumulation. And so the one on the left, the only difference between the two is the one on the left has an example of a spring type structure or action that occurs in phase C. And in the number 2, we have what's called a last point of support, which is a higher low that takes place in the accumulation structure, and then it turns off of that and goes into an uptrend to the top of the range and out. So we're going to talk a lot about that, but we're going to really dig into the weeds and get into the mechanics of what we do when it becomes time to act. So the other thing I want to mention is, again, last week, Roman Bogomazov and myself, we were on Market Watchers Live, and we talked about our new show, Power Charting, which airs the first time at 3 p.m. Eastern on Fridays, and then it shows we go into syndication, and it goes into reruns after that. And so there's lots of opportunities to see the show. And we talk really about, for the most part, about live examples of Wyckoff that are unfolding using things like scooters to be able to help us find candidates. And so power charting, we're having a lot of fun doing it. We hope you enjoy it. This week, because Professor Roman is on assignment, as we say, we're doing a tutorial. And so this should be really worthwhile. And so please try to catch that if you want some review on Wyckoff. Okay, so this is just a reaccumulation structure. You'll see a lot of these in the markets, especially in an ongoing bull market. And so these also have the Wyckoff-ian structures in them. And there's a specific way to position and place stops in reaccumulation structures also, and we will talk about that too. Okay, so now what I thought we would do is just go through a little bit of review on the market. We did some of this last week with Roman, and so I'm just going to go through the major indexes because we had talked about them and bring them up to date. And so here we have the S&P 500. You can see here that we've taken out formidable resistance on this rally up to this condition above this upthrust that we have right here. And now we're consolidating that, but I want to point out something that was not on the charts from last week. And this is a trend line that's more than 3 years old. And so this is a trend line. The solid line is what we call the demand line. We draw that first, and then we draw a parallel line. I mean, and look at how useful this trend line, this trend channel has been. So this jump out of the channel is a massive overbought condition, which produced a buying climax. And so this went on for 2 months. And so this was just a climactic surge for the ages. And it went up into a buying climax and then reversed off of that. As we all know, we were there, and we felt the pain. And this decline came back down into this long-term stride. We call it a stride, but this is the rate at which the bull market is running at. And so you can see that it came back into through the overbought line back into the channel and consolidated there, and then has gone into a large range bound structure. And so, and we have built up, as you saw from the reaccumulation, this looks like a reaccumulation structure. Our concern is we have to be very careful that it isn't some kind of that this range bound condition doesn't go on it's gone on now for months, and that it may keep going on, and we're overbought. So we have a smaller trend channel here. Notice how we went right up to it. And this is what we call a reverse use of trend line. So that means we drew this line first, but it went right there. And now it's turned off of that. The volume is somewhat high. This is climactic volume into this touch here. And now we're consolidating. So what we would like to see from a bullish perspective is some kind of a minor backup or consolidation that goes back to the these resistance lines, and it finds support somewhere in and around these resistance lines, and that would be a great outcome. The S&P is acting very well. Now the big resistance ahead is the peak at the buying climax, and that should be pretty important resistance. So here we are. Notice how the S&P started to respect its long-term stride when it came back into the channel. So here we are, we're back in this long-term channel, slightly above it. I would prefer not to see it come deeply back into the channel, as I'm sure we all would, but we want to watch the tape action. And I do have another shorter term chart we can look at. Here's the Russell. The Russell's very interesting. It's been huge leadership. Notice how the buying climax here in January was exceeded very early on, and the Russell has gone up in this channel, has gone up and thrown over the channel and then came back in. Well, look what it's done. It's had a secondary test of this little bit of a climactic structure here, very big volume off the peak. Now it's testing that again, and this volume tells us that supply is present up here, and that there are sellers that are large sellers, CO types, which are selling stock on this return to the overbought area of its upward trend channel. And now it's tested it again, returned back off of it. Volume has come back in. I don't think this is anything to be real concerned about, but I do think it's possible that we could return back to this backup area, maybe spring it and go to this big resistance, which is now support area, consolidate this, build a point and figure count for another move up. So build a cause. So this was a nice cause. This could be a great cause. And maybe in a future session, we can do a point and figure count on the Russell. And so this chart is quite interesting too. And this is, again, this is the comp, NASDAQ composite, buying climax in January, big change of character, the very long-term trend channel, which is so fascinating. This is like the points that created this trend channel are years ago. They were years ago. So I don't have time to show them now, but notice how when we had the buying climax and this huge change of character, the NASDAQ composite almost came down and touched the oversold area of this channel. And here, even though it became range bound on this climax and reaction, and we were range bound for a period of time, it's come back out. Well, now when it came back down, volume did come up, but it was nowhere near as high as on the selling climax. And we have what we're calling a last point of support that went down and nearly touched the bottom of the channel. And then another one that came down and nearly touched the bottom of the channel, which is by definition an oversold area, and then had a wonderful rally. This is a beautiful point and figure count. I actually did a blog on this, and which produced the cause or the fuel to run the composite up and out of of its trading range, keep it in the stride of the uptrend. But look what's happening now, and this is something we alluded to last week when we were on, and that is that we have this run up to the top of the channel, touched this shorter term overbought condition trend line, came down for a backup, which went to old resistance, new support, rallied again and tested this area here, and has turned back off of that on volume. So you can see a lot of volume coming in. Now, the reason we're concerned, well, in the shorter term trend channel, notice how it's come back down and touched it, and we're attempting to rally off of that. So this trend channel is working. It's attempting to rally. We would love to see this stay in the area of this resistance line and possibly come down and retest this back up. But we'd like to see it build count for another move up. Now, these areas here, I actually, when I wrote this blog, I went in and did these point and figure counts, and they're working quite well. So what I'd like to do is I'd like to take a minute and do shorter term intraday point and figure and some vertical bar chart analysis. And here what we're doing is we're looking at this area here is, let me just orient you, is this backup. So this is what we're counting right here with a 10-minute point and figure chart. And these point and figure charts, I am determined to make all of you Wyckofians out there really good point and figure people, because this is like our secret edge, and you can't tell anybody. But this is what we do our point and figure work, and it really helps us to see accumulations and distributions, tells us the potential for how far they can go. This is what I'm going to do this tutorial on. Zach, our producer, is going to help me to record these so that they're available in the next few weeks when we're magically away at ChartCon. So anyway, so it's like, well, we have never left. We're here all the time. So anyway, here is this accumulation that we just showed. And we have, this is a one box reversal using ATR 20 scaling, and which produces a box size. This is the scaling here of 11.54. So each one of these scaling points is 11.54 above the prior. And so it's 10 minutes. And so this is designed for shorter term traders, but it's also great for us long-term people because it helps us to sort of be in the flow of how markets are changing. I've got to keep track of the time too here. Sorry. So here, look what happened. We had a wonderful count that went from the low at 74.20 and the count line, which is 75.58, and took us up to 79.27. And so is at the extreme. But look at how beautiful this worked. And what kind of a structure do we have here? We have something that appears to be distributional on a small scale, admittedly, but it's distributional and it has an up-thrust quality to it. And so we often refer to these as up-thrusts after distribution. So this is one that's like a mini-me UTAD right here. And look what happened. Run up has a climactic quality. It tests it. The test is a great place to sell, and also the climactic areas. It's a good place to put shorts on for those of you that like to do that. Here is a last point of supply, lower high, and then down it goes. Well, how far can this go? That's our big question. And do you want to know? You have to tell me that you want to know. Okay. All right. I see people telling me.
I want to know, Bruce.
So this is like the classroom, right? I want it to be like the classroom. So I want my students giving me grief. So anyway, so here it is. Here's our count. 22 columns across. Now the scale's a little different because I redrew the chart, but you can use stock charts, phenomenal point and figure tools. It is, now this is a personal opinion, but this is the best feature in stock charts. Now I may get an argument about that, but I love the point and figure tools and the point and figure engine in stock charts. So, but anyway, so here's our count line, 78.84. Here's the high, 79.32. We count across 22 columns, and it's 22 times one box reversal times 1191. There's 262 points of cause that's built into this distribution. And then we can see it resolves itself with a decline where it tumbles down out of this structure, and look where it goes. The count goes to 76.70, 76.22, and look at this beautiful stopping point here. So what a great tool. And this is on, again, on a very small scale, but it works just very powerfully on a larger scale, which I will show you an example in a minute. Now, the thing that we want to keep in mind is that this count should stop the decline, but the term that we use in Wyckoff is that we stop, look, and listen. We don't necessarily act, because we may get a redistribution, another redistribution count for another decline, or we may get reaccumulation, as we just saw earlier, for another move up. And so this is where we have to become chart readers. And I guess I didn't put in a vertical. So this area here, I did a 2-hour, and you can go back and look at my blog post, but I did a 2-hour chart to illustrate these areas a little better. So here you can see, look at up to resistance in the trend channel on 2 levels, which automatically has us thinking resistance, look for attributes of distribution. We go into a smaller time frame. We study our point and figure structures. We have accumulation, we have distribution, we have markdown, and this is how much fuel's in the tank, etc. Okay, so now let's take a minute to look at the Dow Industrials. And just because we had said last week that we saw the composite and we saw the Russell up against long-term overbought conditions, which wasn't necessarily a cause for a decline, big decline. It could be, but what we're saying is that they need to rest. They've had big moves, they need to rest, and we need, therefore, for the sake of the bull market, we would like to see other indexes or areas of the market take leadership. And the Dow Jones Industrial Average is sort of a measure of the blue chips, and and maybe less so today, but of the industrial space in the market. And that what we'd like to see, because there's a lot of value in these stocks, we'd like to see them consolidate and then start to show leadership and then work their way up to the prior highs at the buying climax. And so you can see here that the Dow Industrials has in fact continued to resist going back into its accumulation structure or reaccumulation structure here. And we would like to see it hold up and then start to work its way up to the highs, which will give the composite and the Russell and some of these other areas of the market an opportunity to rebuild themselves with cause for another advance. So now I'm talking like a bull, and I kind of am. I have a bullish bias in my thinking, and I'm always looking for ways to think about the upward stride and how we can participate in that. And so anyway, so here's the industrials. I'm going to show you this schematic. I've only got 5 more minutes, so I'm going to just go right through this. We are going to talk a little bit about this at ChartCon, if I can be a little more quicker in my thoughts and my presentation at ChartCon, which I'm going to do. So anyway, here's from a blog that I did back in late June of an index that encompasses all of the FANG stocks. So I wanted to look at an index of FANG stocks. Now there are other stocks in there, but the other stocks that are in there are FANG-like stocks. And you can see this, wonderful move, 2-hour bar chart, beautiful stride, goes up, becomes overbought at the buying climax, and then turns off of that. And so it was down. This is the chart that I put in the blog, and I said, okay, this is a change of character. That's what this means here. So here's a change of character. It's oversold. It should rally, and it should rally up and make it to a secondary test. But we think that this sector of the market, these types of stocks, have now become range bound and are going to need time, just like the big market did back in January, February. That needs time to build cause for another move. And so we can see this decline 2-hour. Again, this is on a 2-hour scale. And then you can see down here, this is the title of the blog, so you can go look at this. And so then I put a point figure chart in which shows the accumulation, and then it shows 2 counts. So we have a conservative count in green, bigger count in call it brown, and look at and let's see, this is 60-minute point figure. So 60-minute point figure count. Look at how beautifully it caught this overbought condition. So this is what we look for. We look for the trifecta of count being fulfilled, climactic structure, change of character. Now we have a range-bound market, and so this would give us an opportunity to think in terms of the trading range rather than in terms of trend trading. And so we all know what happened with the FANGs after that, or some of them anyway. So here's what happened. We came down. This is the area where we wrote the blog, said we expect a rally. We got a rally, went up to the resistance area. This is why we draw resistance and support. Went up to, made a secondary test, and then it up thrusted that. And then look at the change of character. This decline, very high volume, big decline, probably mostly Facebook, but the other stocks also were affected by this. And you can see that this decline is even steeper than this was, and this was a pretty wicked decline. So anyway, here we are, 2-hour time frame, using a kind of a pseudo index. And I like to do that because it kind of takes the emotion out of it, because we're looking at an index rather than at any one particular stock, and it helps us to see the whole theme. That's why I like industry group stocks and sector indexes, because I think that it gives us an element of objectivity. So here we are, beautiful trend channel. Now we're back down to the support area. So this is a very important area, and we should be really on our toes here and watch and see if we can get some kind of a rally back up in, and now we'll want to judge the quality of the rally that we get. So go back and have a look and at that blog and bring that chart active. Here, I don't have time for this today, but what I was going to talk about is I think that crude oil is at a very interesting place. This is a chart I did a while back early in the year, and this is a very large cause being built in crude oil. Look at these counts, 96, 115. This is the smaller count. This count here goes 174, 193. We have a very hot economy, and a hot economy should drive some of these natural resource companies and commodities as we go. But here, this resistance area is definitely coming into play. And I'm going to show you one last chart at the end, and I don't want to spoil the party with this chart. So I think we've done a really good job on, I think we've done a terrific job on Apple. And so I want to just show you, oh, there we go. I want to show you this point and figure chart, which I did back in 2016. And this is an example of how point figure is so powerful. So go back and look at this, but there were also Apple blogs that I've done since then. There's like 4 or 5 of them. And I think there's links to them in these blogs. I'm sure there is. So notice this distribution count. So the distribution is not particularly large, but it goes all the way down from 130 down to 88, 87, 88, and we went to 89. So, and notice this, that when we got down to this area, reaccumulation developed. So we have this beautiful big reaccumulation structure. And so here we can see that there's a count, a intermediate count goes 152, 159. And then there's the bigger count that goes 197, 204. And fascinatingly, this 197, 204 is right at the place where it becomes $1 trillion company. And so go back, I'll let you do this on your own time, and build a weekly chart that goes back to September of 2016 and look at the price action. Also look at those blogs that I did subsequently to this one, And you can see that this should be, and now we've had a climactic jump out of a trading range. So what we want to do, the way we want to think of this, we don't want to think of this as the end of the Apple advance. We just want to be on our toes to expect a pause and to build another cause for another move up. And so we have all the elements here. We have a jump out on good news. Remember how we were talking about good news in the CO? We have a jump out on good news. We have very high volume, which Tom said that the volume was quite high. And then we're into the area of this larger point and figure count, which is a natural place. So we have sort of the trifecta of events. And we should be really on our toes, because the other thing is we're above a big round number of 200. And so we should just be careful here. I would not suggest anybody sell their Apple. But what I would say is that if you're campaign oriented, you want to just be patient and expect that Apple to digest its gains, and then look for evidence. When we hit point figure counts, we look for evidence in the future of reaccumulation or distribution. And that could be months and months and months away. But for Apple to pause, look at how long Apple paused here. Had a selling climax in the middle of 2015, and it was all the way to the, this is July. That number 7 there is when July started. So it went up and came back. So in the month of July, and let's see when this was in August. So you can see there's September. So July back to September, builds a big cause, big trading range, and builds a cause for a move that goes from the $90 area to 200. And so it takes time to build cause. And so we just have to expect that. That's how the markets work. And so we have used up the fuel in the tank for this particular move. It could run a little higher from here, but it wouldn't surprise me in the least if we don't end up in some kind of a range-bound condition and building cause for another move. So anyway, so on that, I think I probably used more than my time, and I turn it over to you guys.
That's okay. I'm sure everybody got a lot out of the discussion, and I'm sure those who have signed up at ChartCon cannot wait to hear your presentation coming up. I can't wait to hear it as well. I'm actually starting to use a little bit more Wyckoff. I don't know if you've been listening to the show, Bruce, but I do pick it up once in a while.
I have, and I heard you talking about springs the other day, and that ESIO in that reaccumulation had a spring in it.
Oh.
And it turned off of that spring and started to run. And so these are wonderful tools. And so, but I have to warn, Wyckoff is addictive. Once you start using it, you don't want to stop.
Well, I do use it. I have been using it more often. So I don't know, maybe I'll have to add that to my therapy list.
There you go. Okay. Yeah. So, well, thank you. Thanks to everyone for having me on.
Yep, always a pleasure to have you on here, and I can't wait to see you next week, Bruce.
Wonderful. Can't wait to see you guys and see your talks, hear your talks.
Oh, excellent.
Okay, well, there was another great presentation. Are we ready for the 10 and 10?
Indeed, and there were a few questions in the chat room. I will pass those along to Bruce, just so you know.
Thank you.
All right. Yes. All right. So let's see. Let's go ahead and look at the RRG just very briefly. Here we go. And I was running through them, and I thought some of these looked very interesting. If we haven't covered them in the last, 5 shows or so, I will put them in if I can. And I do keep a list so that we don't repeat over and over. And I would ask that please only make one request. And then once you've made your request, go ahead and like other requests. And we'll see which one is most popular, and it will be the second one. So let's go ahead and start it off with the Lumina.
All right. First of all, it is in the biotech space. I'm a fan of the biotechs, especially if we can get this breakout right here. So I've annotated this one. This is the biotechs down here. You can see that it has been trending higher. It has a very strong July, as it typically does. We talked about that seasonal discussion back at the beginning of July. how strong biotechs tend to do in July, and that once again we had another very strong month. However, if we could get this breakout, I do think that we've got more room to run on the biotechs. The market tends to struggle in August and September, and if that's the case, and money flows into the defensive healthcare, we might see a little bit of relative strength in the biotech group. But looking specifically at Illumina, I really like this stock, and we've talked about this many times on the show. But if you just look back to where the peak was on the biotechs in January, along with the overall market, and then take a look at where we are right now on the biotechs, you'll see that we're still almost, probably 150 points, maybe 7% off of the high that we saw back in January. And yet, look at Illumina, which was down below 250s, now up above 3.25. So we've had a stock that is clearly outperforming its peers, and that's what this really shows me, this particular relative strength chart. You can see Illumina outperforming the biotechs, Illumina outperforming the S&P 500, and the biotechs, which had been under a little bit of pressure, are now up against an area of relative resistance. So if we could get strength on the biotechs to break out, and we also could get it above this recent relative high, then I think we've got a group that is beginning to strengthen, and here is one of your best stocks within the group. So I'm a fan of Illumina. It has made a big move off the recent low. I think that was earnings related just a couple of days ago. Very strong earnings report, by the way. But this is one that on a pullback I like.
All right. And the most popular symbol in the chat room happens to be CRM, Salesforce.com.
Okay, well, it is in the software space, and many of the software stocks have been hit. So I'm not shocked that CRM is also being hit. We did go a little bit below price support. You can see the top that was established back in June. We broke out on some decent volume first couple weeks of July. We've gone back, though, and on heavy volume, we lost support. And as you can see, we're coming back up from underneath the test. I think CRM in the short term has a little bit of resistance from about 140 to that 20-day moving average. And so for me, I'm a little bit skeptical in the short term. Longer term, I think software still looks good. But this is a group, I think I put it in my blog a couple of days ago. It's been up like 70% in the last 18 months. And so it probably could use a little bit of consolidation. And if that occurs, obviously stocks like CRM are going to suffer a bit. I think it's a great company. It's in a great space, but the group is overbought. Watch these overhead resistance levels.
Okay. Let's see, another one from technology. How about Roku? I know we've talked about that before, but not for a while.
Yeah, I'm actually beginning to build a position in it again. I got into about a third of what I had sold previously. They do report earnings next week. I don't know what I'm going to do with this one because I really like Roku. I think that the volume coming in on this move to the upside has been very strong. The big problem I see is that Netflix, Twitter, some of these other companies have struggled with their earnings reports, even though they did look strong going in. So Roku may run into that same difficulty, but I do like the fact that on the selling over here down to the 50-day and also to gap support, that volume has been much lighter than it was on the way up. So here was your gap support. You can see the gap, very heavy volume in early July. We went right down to that level 2 days ago, back on Tuesday, tested, and we started bouncing. That was the first area that I was looking for entry. The big entry, the rest of my position, and I'm hoping it goes back down there with earnings, maybe solid earnings report, maybe a sell-off, would be down in the low 40s. I think that would be great entry into Roku.
All right. Let's look at Broadcom, AVGO. It was unable to close that big gap. I'm not liking it. I did get a PMO buy signal, but it's pretty flat and thin.
Yeah, it's doing about what I expect when you get a gap down like this, or you just have selling and a stock starts to move back higher. I mean, look at the 20-day moving average. I mean, look at all these tails. Intraday looked like we were making breakouts above the 20-day, and then we roll over. I think that we're going to probably more likely than not head back down toward the recent lows. So there's your low candle body. There's your low intraday move. So I wouldn't be surprised to see another trip back down close to that 200 level.
Okay. In the biotech space, CWBR trading range, it doesn't look all that interesting to me.
Yeah, it's been under pressure. If only maybe one thing that stands out is that we are at a pretty critical gap support level. And that would be, although I would prefer it if there was a lot more volume on this gap up. But here was a gap up. Volume did pick up, but it wasn't huge. And if you look at the volume, 32,000 shares traded today, and it's a $5 stock. That means dollar volume currently is $150,000. You would control the entire trading of this stock today with $150,000. So these stocks are very subject to manipulation. I don't like it because of the lack of liquidity more than anything else. Strictly from a technical perspective, though, I would be watching this gap support. We've gone down, we've tested it on multiple occasions, haven't broken below. Right now, we're right on the cusp of doing just that. So I'd be careful with it. One last thing, though, is if it does break to a lower low, you can see the PPO beginning to rise. So maybe, just maybe, some of this selling momentum is slowing here.
Yes. All right. Financials, property casualty insurance, Lowe's Corp, L.
All right, L. Well, I like the last few days breaking out above some recent highs and the volume increasing. So definitely that is encouraging. And then if I take a look at the volume down here, see the volume really picking up these last few days as we've gone through the and moved to about a 2.5 month high. We do still have some overhead resistance, though. Next level is going to be up close to 52, well, actually closer to 52.5. I think we're probably going to head there. I would treat this as a pretty narrow trading range right now, maybe down to the 20-day moving average to the downside, which is at 50, and to the upside 52.50.
All right. All right. This chart looks really interesting to me because it's sitting on some major support on the weekly chart and on the daily, and that would be Ford Motor Company, F.
Yeah, I'm going to stretch this out a little bit. Yeah, planned support is certainly, a potential trade. You can see the $9.80 to $10 level clearly over the last couple of years has been where Ford has found buyers. If you're trying to buy based on relative strength, this is not a stock you're going to want simply because you've got a stock that's been going down, clearly underperforming the market for the last couple of months. Automobiles have been weak. Got good news out of Tesla. So we're getting a little bit of pop there, and yet still Ford not really making a push to the upside. I would say that from strictly a price support level, it's a buy. But if it were to fail and break down and close below 980, given the way this stock has traded for the last couple of years, a breakdown would not be good. So watch for that.
All right. Let's see. The next one from Durable Household Products, ACCO Brands, ACCO. I don't like it.
Uh-oh. All right, let's take a look. ACCO.
Mm-hmm.
Yeah, I don't like this one either. Out, came back down, got the 50-day test, and then I'm sure that was probably earnings related. We've got so many earnings reports coming out. But yeah, when I get a big gap down like this, and especially if it's earnings related, and I break the uptrend that I had been on for a while, I'd have to, at a minimum, let this settle down. And even before the gap down, it was a stock that really was pretty range bound, and outside of maybe 2 months here where it was trending higher, it's been pretty boring throughout 2018. So given the gap down, the big volume, for me, I would avoid it.
All right. This is another interesting trading range stock, Manitowoc, MTW, commercial vehicles.
Yeah, commercial vehicles had a pretty good day yesterday and then had a rough day to 2 days ago it had a good day. Yesterday had a bad day, and you can kind of see this one followed suit, rising back on Tuesday, falling yesterday. Again, this one, you've got gap support and you've got price support. So that's really what you're hanging your hat on if you're getting in. It has been an underperformer for quite some time. That is your gap support and price support. I would say 23, 23.50, 23.60. This is the zone where it needs to hold. But look at the stock's performance over the past several months. The S&P 500 has been rallying. Many areas of the market have been rallying. This stock can't seem to get any kind of traction going. So really, you're pinning all your hopes on support holding. My approach would be simply good luck, because this is not the kind of trade that I like.
All right. And our final one from the utilities sector, Scana Corp, SCG.
All right, trying to get a breakout here. $41 is pretty big. I'm going to stretch this one out just a tad. Let's go a year. See if there are any other tops up here worth considering. Actually, it's been on a downtrend. It's trying to break out of this downtrend. So more volume would be better. I really like to see accumulation take place. But you can see that 41-ish, the high back in March. We've had double bottom go in, actually multiple tests down around $34. We've come back up, and now we've been trying to get through 41. We hit 42 and change earlier today before pulling back. If we leave a tail up there above this level, that's going to concern me a little bit. But if we can get the breakout, I think we have a shot then to make a run maybe for 47. So let's see how this one closes today.
Okay, and that is 10 stocks in about 10 minutes. Thank you, Tom, for getting through that. And here are the symbols. I will get those up in the Market Watchers Live chart list. You'll find the link to that at the top of the Market Watchers Live blog. Grab those charts, save them to your own chart list, and you got the annotations and everything that Tom just did. All right, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
It's time for our final market update here on Market Watchers Live. As you can see, a kind of a mixed bag here with the Dow down right now. It is trying to recover from those intraday lows. Could hit positive territory soon. You can see S&P 500, big gap down, but has been rising ever since. Same with the NASDAQ, and OEX also having a great day, beating out some intraday highs we saw yesterday. Mid caps also doing well. They didn't really have that big of a trip in the morning, but they're now flirting with some intraday highs as well as the Russell 2000 in the small cap arena. Canada TSX is currently on the positive side, but seems to have stalled at about 16,400. The 10-year Treasury yield is down somewhat, currently reading at 2.98%. UUP, big gap up and is now testing some intraday highs. And we can see that gold is consequently down, moving lower. GLD down 27 cents. USO, big move to the upside here after a bit of a down move in the morning. It is currently also testing intraday highs. The VIX, there was a lot of nervousness starting off the day with that big drop in the morning. But as the markets have been rising, we're seeing the VIX slowly moving back down, currently reading at 1265. And that concludes the final market update. What do you have to add, Tom?
Okay, I want to take a look at the materials just for a second, the XLB. If we take a look at the XLB, you'll see that we've been sideways consolidating. First of all, the group has been really weak, but like the XLE, the XLB has quite a bit of its eggs in one basket. The XLE, of course, we talk a lot about ExxonMobil and Chevron. Well, the XLB is there's about 23% of the XLB is in DuPont, DWDP, and they just came out with earnings, and the market didn't really like those earnings. And you can see Dow DuPont taking a hit, but coming back down and hitting some key support at about 65 and bouncing off of it. So far, that's pretty good. Now, if you look at a couple of the other stocks that take up quite a bit of the weighting of this ETF, the XLB, Praxair is about 8%. Praxair had a breakout recently above this double top, sideways consolidating, also fairly close to support. And then you have ECL, Ecolab. And Ecolab looks to me like after moving higher, we had this downtrend. We've broken it on heavy volume, moving back to the upside. Those three stocks are about 37% of the XLB. And when we look at the XLB, while we might say, well, on a daily basis, we're not going anywhere. I think if you stretch it out to a weekly basis, you'll see that actually we're consolidating right at this rising 50-week moving average. And after topping in January, I think that the XLB could just simply be consolidating for a move to the upside. And I think the top holdings, the three that I just went over, I could make an argument for all three kind of moving higher from where they are right now. And so I think that there's some support for the XLB, even though it's weak and on the surface doesn't look great. I think the component stocks there could lead to a move higher in the XLB in coming days and weeks.
All right. Let's go ahead and get started then on our chart breakouts. And I'm going to go through mine first here. Let me get myself set up. I did start off with a scan, as I usually do, to find my chart breakouts, my momentum sleepers, all of those. I will run various scans to get into the nitty gritty and find some that I like. So I wanted to just take you very quickly to how I found the beginning of my scan, and that was to go to the predefined scans. And I moved in there and I decided to look at stocks in a new uptrend based on the Erin indicator. And so I pulled that up, and I already have that ready to go. And it gave me this line of code all ready to go. And when I did run it the first time, there were, a lot of stocks, even when I set it up for the country to be US. So I decided to add the scooter and look for those that were above 70. So I ran the scan and I saved it into a chart list and looked at everything through Candle Glance. And I came up with these 5 stocks. So I'm going to go over those real quick and give you time for yours, Tom. But I'm going to start with Cytosorbents Corp. And you can see we got a nice breakout today above those highs that we had back in July. I've got a PMO that is turning up. And, you're already starting off. This is newer, so we're just now getting the calculations on the scooter, but we're still in the 90s. While I'm not particularly fond of the way the OBV is acting and the fact that the PMO, since we started with those tops, we had declining tops, but these were mostly flat tops. So I didn't feel too bad about that. I like that breakout though. That's the main thing. Of course, we're looking at chart breakouts and I'm getting a PMO that is turning up on that breakout. So I think that is one that is interesting. Acushnet Holdings Corp Golf. I imagine you like that symbol, Tom.
Worked out okay for me.
So we did get a breakout from this narrow trading range that we'd been in here with golf. And I got a bit of a fake out buy signal, but now we're getting another buy signal on this move. And granted, we're looking at some fairly large moves today on these breakouts, but I think they are interesting to note when you see new buy signals coming up, when you see rising scooters, because I think you could still see a run up past those breakouts. I would probably wait for a little bit of a pullback here after a big move like that, so I'm not chasing it. But I think the setup here looks very nice, getting out of that trading range and moving up now to test those highs that we saw back in June. So I thought that was a pretty interesting one as well to look at. G1 Therapeutics. All right. Now you can see we had the breakout yesterday and we're now getting that pullback and it's coming down below that area of where the breakout was. While one may say, I don't like that because it couldn't hold that breakout and we're looking at a more than 4% decline, I still think that this one has some merit. And that is because, and I'm going to annotate it right now. All right, here we go. Yes, that looks good. This area from that June top, we're stopping right on that, on the pullback. And then if you draw a rising bottoms trend line as well, and we'll start it from right about here. You can see that it's still holding above that rising bottoms trend line. So between those two areas of support matching up here in my mind, and a PMO buy signal and an OBV pattern that is supporting that move to the upside. And then of course you have that really high scooter. I think you've got a lot of potential here and you don't have to chase it. And if you wanted to set that stop a little tightly, a little more tightly. You've got some area that you can work with down here, you know, at that 47.50 level, or maybe just above it, depending on the size and length time-wise of the trade. But I thought this one looked especially interesting. All righty, so I'll save those changes. And I will, whenever we show scans, I do try to give you a screenshot of those scans in the Market Watchers Live recap. So you can go ahead and go there and you'll be able to see the scan language that Tom and I do use when we run the program. So this one I thought was a very interesting breakout as well on Intelsat Global. You've got a PMO. Granted, the bottoms have been in decline here while you're having rising price bottoms, but I consider that more of a reverse divergence. We've got a breakout and what I would call an ascending triangle pattern here, a pretty textbook looking one. And you've gotten a breakout as expected from this bullish pattern. And now we look, as far as measurements go, the back end of this triangle, and that's about the move you should expect to the upside. So I think there's a lot of upside potential here for Intelsat Global. And I do have a PMO that's turned up, but we had a PMO that turned up back here earlier in mid-July, and we didn't get the buy signal. We saw it again back in June. So I would probably want to wait for that buy signal to come in, just because we've had so many of these fake outs. But the fact that we're coming up out of this pattern, I think, is very encouraging, as we say. And I'm going to just peek at it on a weekly chart. And you know, when we were talking about the size of that ascending triangle, let's see what the measurement would be: 16 to about 2150. Let's just give it an even $6. Let's say it's a $6 rise. So what do we see on the weekly chart as far as a move to like 28? That move goes right up here to those highs from when it initially came out. So I think there's still some really nice upside potential here. Of course, the weekly chart, we've got a really overbought PMO, but I'm not too concerned about that at this point, because we just don't have a lot of power yet, documentation on it and data. All right, so right now, Progressive Corp I thought looked very good. We have a PMO buy signal that's been in play. We're getting a breakout from this trading range, and there's plenty of upside potential, I would say, here, even if it were just to stay in that trading range. And, you know, given the setup here, that buy signal in oversold territory, you know, I'm looking for a similar move as we got off of this one in oversold territory with a nice clean breakout. So I like Progressive as well as far as the chart breakouts go. What do you got for us, Tom?
Okay, let me just quickly show you what I did. I started at the member dashboard, went down to the bottom under the scans, went to the predefined scans. I'm not going to go through all of it because it would take some time, but I started with the new 52-week highs. And if you click over here, you can edit the scan, which is what I did. And I changed this and went to 6 trading days ago to get the 52-week highs. And the reason I did that, if you look at the S&P 500, it was 6 days ago that the S&P 500 set this high. So I wanted to catch the stocks that had gone up and made the breakout with the market, and then maybe we're pulling back to key support levels. And so that's the scan that I ran. I ran it as of 6 days ago. And then I also further filtered it by using scooter ranks that were less than 80. So I didn't want the stocks that have been, you know, just going up and up and up forever. I wanted stocks maybe that have just recently started to break out and have pulled back. And I took that list, got rid of the London stocks, you know, some of the other foreign stocks, because I tend to trade only U.S. stocks. Got rid of the illiquid stocks, the ones that hadn't been trading many shares, got rid of all the ETFs, and I narrowed it down to this list of stocks here that I'm going to show you. So Becton Dickinson here had moved higher. We had a negative divergence. I believe they just came out with their earnings and they beat, I believe. I don't know if I have that report. Well, they beat on the top line. I don't have their bottom line. I know they beat on their top line, but the stock, after having a lot of this already built in and having a negative divergence. Once they reported, the selling kicked in. The stock, if you notice, went all the way back down to the first key area of support earlier today before moving back up. But this was a stock that, again, if you look back 6 days ago, was setting a new 52-week high. But I'm using the scan to try to find stocks that recently had a chart breakout, but have pulled back and maybe presenting a little bit better reward to risk. FCF, First Commonwealth Financial, beautiful move up, great volume on the breakout. We pulled back almost exactly to gap support, and you can see the rising 20-day coming up from underneath as well. As the stock pulls back, to me, the reward to risk is just turning a little bit more bullish. Ingersoll Rand, IR, big breakout. We really haven't pulled back much over the past few days, but I think if we get back to close to that 20-day moving average, certainly back down to $93, this is a stock I think that would be interesting. Great volume on the breakout as well. Medtronic, here you can see I have a weekly chart. And going back, we had multiple tops in the mid to upper 80s. 87.5 was key resistance. We just recently made the breakout. The weekly PPO looks good. I think Medtronics is just beginning a nice rally. Paychecks move higher, lower PPO, negative divergence yesterday and today. Tested the 50-day. We're starting to bounce off of that 50-day again. This is just another example of how you can run a scan from a few days ago and using certain parameters, maybe get these pullbacks set up and Paychecks bouncing off of its 50-day moving average as I would have expected. Republic Services making the breakout. It has continued moving higher ever since it made the breakout. Look at the volume coming in. Excellent accumulation here, but most stocks will pull back. So this is a stock that I would keep on my radar. And if it gets back down to about 70, 71 in this range, I think RSG starts to look like a pretty good trading candidate. TNC, one word of caution here. This one was borderline too illiquid. In fact, it probably is. I don't think I would trade it. Did have great volume coming in over 3 days. You can see anywhere from 200 to 400,000 shares, which is heavy for this stock. It did break out above the double top. Went back down on the false breakdown. It is testing the rising 20-day. I think the stock will make another push to the upside, but the volume does bother me. Okay, those are the stocks that I had. Erin gave you a handful as well. So we will pull those up, and you can see the breakouts that we talked about, some of which Erin's were just breaking out. I took a little bit different route to show you some that had broken out when the market was at its high and maybe presenting some opportunities on a pullback here. But different ways to get to similar stocks, all of them performing pretty well.
Yes, absolutely. What did you use as your starting predefined scan?
The 52-week highs.
52-week highs. Got it.
Yep. And then I just narrowed it down. I mean, once I added a filter for scooters less than 80. So if scooters were 90, up in the upper, and again, the reason I do that is when the scooters are only at 80, they are probably not a stock that has been making 52-week highs for a long time. It's probably stocks that are just starting to move into that top quartile. And so it could be that they're just starting a major move. And looking at them 6 days later, obviously like Paychecks and a couple of the others I showed, they've pulled back and maybe present a little bit more palatable entry.
Mm-hmm. That makes sense. Well, another show to wrap up already. Can you believe it?
It is hard to imagine that another day, every day when I do my blog, I just can't believe how fast the year is going by. It just seems, it's, we were talking about ChartCon for a couple months and now it's here. And next thing you know, my daughter gets married in September. And then the next thing you know, it's going to be Thanksgiving, Christmas, football season will be over and we'll be in 2019. I mean, it's just time just seems
exactly. Well, when you have things like ChartCon and you have things like a wedding and those types of things, of course, that require a lot of preparation, they do sneak up on you, it seems like.
Yeah, no doubt about it. All right. Well, we had the poll up earlier and we got 165 of you to fill it out on Tesla. They did have well, I guess it depends on how you look at it, whether or not they had a good report. They lost a lot of money. But remember, Amazon lost a lot of money for many, many quarters, and I don't think too many people would argue with Amazon today.
Yeah.
So, go ahead.
Oh, what would you do personally? I'm I'm in the stay away category. It's just too volatile right now.
I would buy it. I don't know that I'd jump in today, but definitely Tesla is one of those stocks. I mean, you've got an auto industry, which is not very exciting. I mean, let's be honest. I mean, this is a group that, for the most part, is just being passed by every other company in terms of market value and so forth. But Tesla's got the edge. Tesla just seems to have the edge. And I would even say maybe GM to a little bit of an extent. But Tesla just is the one that I'm watching because it's been in a long-term sideways consolidation. And if it breaks out, I could see this one running very similar to what Amazon did.
Absolutely. All right. Well, there you go. You can see the upcoming schedule for Market Watchers Live. We will be on hiatus as of Wednesday, August 8th. So yes, no Market Watchers Live until after we get back. We do have special segments, though, that a lot of our presenters and staff have done that are new that we won't air until that week while we're gone. So there'll be plenty to watch and look at while we're gone.
Yep. And just want to quickly point out to everybody, the Dow is trying to go green after being down close to a couple hundred points earlier today. The Dow only down 22 points. NASDAQ up 85 points, kind of getting ready to cross that 7,800 threshold again. But anyhow, I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.